Okay, good morning, traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, November 8th, FOMC day on a Thursday, which is weird. Good to be with you guys this morning. Kamal, Christopher, Mark, Marco, Mohammed, Pete, Tom, Ziad, the whole crew's here today. So good to see you guys this morning. Got a lot to cover with the FOMC on tap later this afternoon. No changes expected. We'll be looking to see if there's any shift to the accompanying statement, but largely speaking, markets have already priced in the December hike, which will be the next one on tap next month. We're expecting a hold here, but as always, the accompanying statement is what's going to move things. As it stands, last night we were talking about the dollar rebound and the fact that it has a little bit more legs to it, maybe. Yesterday's reversal on a lot of different pairs made a doji at the high. We talked about that on Euro and some of the other crosses. So wouldn't be too surprised to see some take back with this dollar rebound. Largely speaking, though, the levels remain pretty clean. DXY, we'll cover that first. Euro, Kiwi, that's still dollar CAD, Aussie. We'll circle back to the previous update on dollar yen and Aussie yen. Aussie yen breaking the highs. I don't have any set plays on that. I was actually looking for failure there, but we've just blown through. So we'll take a look at the Aussie yen levels, but I'm not really actively trading that right now. Oil and crude, oil and gold, both also very clean setups. Last but not least, we'll hit back on the sterling. Okay, any other crosses or setups, trade setups or questions you have? As always, feel free to throw them on the message board, guys. Here's what the DXY looked like earlier in the week. We all know we've been looking at this weekly chart really clean, the parallels that we reversed off of last week. The focus into the start of this week was right here in this range. We're still holding it. Yearly high comes in at 96.98. We probed into it, made a new high last week. Nonetheless, we're looking at this range into the long 200-week moving average. So that gives you essentially 95.80 into 96.99. Okay, this whole region right here is what we're looking for on a weekly close basis. Daily chart is pretty clean as well. Yesterday we came into a pretty nice support structure. I'll show you the near-term chart in a moment, but here's the daily chart. Here's what it looked like earlier in the week. Essentially, support on this chart, we highlighted 95.68. 95.67 turns out to be something on the intraday chart as well, but 95.68 is just simply the previous high day close that we made back here in October. That reversal close converged right on basic trendline support. A parallel of this caught the highs. So right off the bat, you're looking for that third touch that gives you 95.68, 95.67. Excuse me. Now, once we got there, the reversal was pretty hard, and we actually made a reversal candle off that level. Here's what the intraday chart looked like earlier in the week. This was on Tuesday. We came right off that 50 line, or excuse me, this was a 38.2 line of the slope. A break of this 38.2 line, and essentially you were looking for a drop right here, 95.71. That's the level. This is a 618 retracement of the entire advance. It converged right on that lower parallel. So bearish invalidation we highlighted at 96.94. Okay, that was the level we needed to hold, and we were looking for a drop into confluence support at 95.68, 95.71. Here's the intraday chart now. Super clean. Okay, so here's the DXY, and again, came right into that pocket support. There it is, perfect touch. The low registered at 95.68 on the dot. And right after this reversal, you want to use some caution. You've come into some basic or critical support confluence. Again, this is also that reversal day close. Like I said, that's what this 95.68 level is, aside from the 618 and slope support. So you were looking for a little bit of recovery. The major level of resistance, or the first level of resistance you look for, is right back at the median line. It's what we came into last night. We're coming off. Now look, FOMC is on tap at 2 o'clock today. I'd be hard pressed to get into anything aggressive if you're not already holding something. As a disclaimer, I'm still in Kiwi. We'll go over that setup in a little bit as well. And we don't want to alter necessarily our views, but expect volatility. Okay, the dollar rebound in my mind, again, as long as it holds below that 38.2 line. At the end of the day, that's where we found resistance early in the week. That's where we found support last week. That's where we found support this week on the pivot was resistance, again, support last night. That should be our near-term bearish inval at this point. So as long as we hold below yesterday's high, all things held constant, we're essentially still banking or we're looking for a close below that key region of support. Sorry about that. Right here. We still need to close this level. Okay. Now you have upslope support there and downslope support there. So if we break this threshold, we should get an accelerated drop. 95.47 is just 100 off the high. It's two equal legs, 100-day moving average. It hasn't moved, right on point, 95.21. Okay, so no change to those levels from earlier in the week on the DXY. Heading into the FOMC, if you get a spike, this thing rips into 96.46. I'm looking for failure here, maybe on an extended stretch. I don't want to see it, but as long as we hold basically below this slope on a closed basis, we're looking for an exhaustion for the secondary move lower. If we pop through this, I'm not necessarily bullish, but I'm not bearish anymore. I just want to be neutral, okay? If it gets into the upper parallel, we'll look for a reaction there, but all things held constant, I do not want to see price surpass this region if we are still heading lower. Keeping in mind that we just rebounded off of upslope support and downslope support. So maybe a little bit more to go. If we get some sort of rip on an exhaustion spike on FOMC, fine. All things held constant. Still a pretty big level here. Pretty big level. Questions on the euro. Hey, man, good morning to you as well. D, great to see you in the room. Or questions on DXY. It still looks like it could make a rip, guys. Just based on what we're seeing in the momentum signature, it's the highest probe we got in momentum. It turned ahead of 60, which means we're still sort of heavy on the trade, but I do not want to see this thing start to rip much higher from here. We have to allot the possibility for some further recovery. The reversal we made yesterday was pretty prominent off of a basic slope support. So if we're going to get any type of near-term recovery, this would be the time we'd look for exhaustion while below this region. Okay, that is Ty saying lots of reversal candles, one after the other. One says lower, the other one say higher. One says lower, one after another. Yeah, Ty. So these type of reversal patterns, that's why we have to be very cautious, right? First of all, none of the breaks that we've been seeing of these near-term ranges have actually given us follow through, right? So even on the recovery, we were looking for the DXY lower. We talked about it earlier in the week, but past here, I mean, you really need to see a more significant drop. That's not what we saw. In fact, this was the strongest part of the rebound. So yeah, it could have some more play to it into FOMC before we turn. Nothing too surprising, Ty. But if you're trying to take a longer term approach or a longer term aggressive stance on something, it's just not the environment for it right now. So use the levels as you see. When we get there, react, do something. I'm looking for a possibility for another exhaustion if this rips, but at the end of the day, we defended a pretty strong support level. So we have to use a little bit more caution here. Not expecting anything big out of the FOMC, just my humble opinion, but we'll have to see what Jerome does with that statement. Okay, let's jump into the crosses. So that's DXY. I just wanted to hit that first. Last night's update went over the euro setup that we've been following. And here's what it looks like. Another one that was super clean. Earlier in the week, on the 5th, we highlighted euro dollar as it was trading within this ascending formation. Huge reversal that we made last week off of a big level. Constructive above 1360, looking for a pop into that 50% retracement. The median line was just right around 114.80. The big level was 115. It's the 618 of the drop. Very similar, no surprise, to what we're seeing in DXY, right? So fast forward into last night's update, and we ripped right into that 618. We literally topped right at 14,999 and turned lower. So on a turn like this, exactly the same scenario that we're looking at with the DXY reversal off support. Maybe he's got a little bit more to go. I wanted to see some sort of exhaustion ahead of the lower parallel, 618 retracement. Both of those converge right around 1378. I'm not in this, but I do think if we get, again, that spike into FOMC, if we hold or see some sort of exhaustion down here, I'd be looking for entry. Here's euro now. Okay, so we broke an overnight trade. When I woke up this morning, I was pretty encouraged because I thought we were going to get the drop. And here's the reversal back into this pivot. So look, it's a clear pivot in price. It's 1432. We've been talking about that level for a while. The 38.2 retracement's there. The 50 line is there. You know, look for reaction here. I'm not in this. If you're going to take anything, it needs to be against a swing low here if it does rip higher. Ultimately, my favorite scenario is sort of a failure on a move lower. You know, not necessarily as deep as the 2018 low day close, but maybe into that lower parallel, that's 618, maybe outside this pitchfork, even down this low, to try to get entry on this. But you know, we're coming off huge support in euro. Don't forget the weekly chart is so telling, so telling. Here's the euro weekly, right? And Jamie, guys, will be on later this right after this webinar, a couple hours later, 11 o'clock for the midweek strategy webinar. You can get his take on this for the longer term picture. But you know, the weekly chart here has just been rock solid support, turned ahead of it. Yeah, we probed through it last week, but pretty nice rebound. And I still think, you know, we're on the right course. With divergence into that low, remember when we're looking divergence, all that matters is the close. So certainly a lower low and a higher low, both reference points above 30, pretty decent signal after a trigger break. Our base case scenario is that we do move higher, just initially now, near term. Wouldn't be surprised if we probe a little bit lower, maybe into the FOMC before we start to rip. So very similar tone as DXY on the reversal, lower, euro on the reversal, higher. Still has a little bit more to go before you start to get sort of a more conviction entry on trying to play this. Pretty quiet on data from the Eurozone. Hey, Marco says, when you say a little lower, you mean 1378? Yeah, I mean, ideally, it's going to be one of these two levels. If we get into the lower parallel, I'll look for exhaustion there against that swing. It still would need a stop against 54, which would be a 40 pip stop, still pretty big for me. But if we were to probe down here on a spike, like into the FOMC, Marco, I think 1378, 1390, this whole region is where I'd start to be a little bit more interested in finding exhaustion. Iman says, I'm long from 1420, but not convinced, and my stop's at 1390. 1420, you're not going to, yeah, I mean, where's your stop again? 3090? I hear you. I'm not thrilled with the stop, Eman, if I can be quite honest with you, just because right below, right around 3090 is that swing low and that parallel. So if it gets into like 88, you're going to get stopped out. So just keep that in mind, the slope and the highs, although we've probed through them, if we take a parallel, guys, off the high, it's pretty dead on with the slope. You see that? So, Eman, just, you know, if we were, or if price does drop, yeah, I guess 90 would be an okay stop, but just keep in mind that lower parallel is just lower. Yeah, I'm not convinced either. Not yet. Here's the 30. Here's the 10. Yeah, you're not out of the woods yet. But do you see this price pivot? And this is what gives us conviction, guys. And oftentimes in the webinars, we don't get too deep into it with the 5 and 10-minute charts. But when you're looking to play off a level, this is exactly what you want to see, a level of low tolerance for the markets. When we get here, it's either reversal, push away, reversal, push away, reversal, push away, or if we break, there's the acceleration move on either side. Support, 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 breaks, whipsaw, we straddle it, and we're still straddling it. So you're essentially still looking for a play off this region. If we pivot back above 1432 into the open, bring your stop to break even, Eman, and let it play out. But if this fails into the US Open and we start to drift towards these lows, once we clear this, yeah, I think your last hope is sort of for a look into that lower parallel, the 618 for entry. I don't want to say it's not going to work because we don't know that yet, but I just don't have the signal for me just yet. Thank you. Cheers, says Eman. More than welcome. Okay, says Marco. Ever since that low at 1310, it seems every rally fails like yesterday. lower highs for the most part, says Ty. That's Ty. If we're looking at this on this time frame at the 10-minute, absolutely, it's been making lower highs ever since the high that we made near 115 this week. So remember, the pullback is what we were expecting. That was the last target that we were looking for into the 115 handle. That was huge. So not too surprised to see the pullback here. Let's see if we can't find some support here. Eman, like I said, watch that lower parallel and keep in mind 1378 is the 618. So if we do drop into it, still could possibly get an exhaustion trade there. Okay. Questions on Euro. Heading into the close of the week, heading into the FOMC rate decision. Still holding that upslope. We want to find support ahead of 1378. Okay, that's number 2. Number 3 is Kiwi. So this was worth a shot for me. It's not really giving us much play on the downside just yet, but yesterday's reversal was ridiculous. The level it came off of was ridiculous. The fact that this happened on what many perceive to be a pretty dovish RBNZ. Essentially, guys, they said they're not going to move on rates till Q4 of 2020, like for the next 2 years. So I'm not really sure what the rip is all about, except for the fact that since last week, we've been talking about Kiwi on the top side break of not only last month's range, but also yearly downtrend resistance. So we do love the upside, but on the fact that we came into here on a pretty dovish RBNZ into confluence resistance has me in a short. It's a pretty tight stop against the high. If it works, it works. Initial levels of interest for the first third of the first quarter of the trade, I have it on there, is 67.45. 67.45. If we get into that 50 line, take a little off, go break even on the stop. The bigger support barrier is down at 67.15. This is a longer dated 618. I'll go over in a moment. But also some former swing highs right here, which converge on a slope that we've been following off the lows from October. So this would be like sort of the last 2 regions to peel any off if you're holding that. But it's a pretty decent region, okay? And momentum has been marking divergence all into those highs last night. Really big level. So just to take a step back, Kiwi on the weekly charts looks like this. Okay. So the big region that we wanted to highlight on the weekly basis is the 38.2 of the yearly range, all the way from February to the low we made last month. That gives you 68.11. The low week reversal close of last May. Now I realize we probed through it, but bear with me. That level came in at 68.54. Last year, late in the year, we did test it and break below, but look what happened this year. It was the exact low that we made in May, and then the break fueled the accelerated drop into the lows. So that's 68.54. So on a weekly basis, you're looking at like a 40 pip region of support. Just so happens that yearly, multi-year slope resistance is right there as well. Okay, so look, fair game is 68.11 into 68.55. I still think even if it breaches there, I'm going to take a stop on that. But this is where you start to look for the possibility of some exhaustion, right? On the near term, we like the broader to trade higher. The daily chart shows us breaking out of the pitchfork off the yearly high. February, May, June, that's your modified pitch. Caught the low, caught the low, caught the high, break, acceleration. So if I were to move this objectively, you look at this and you're like, hey, that's a breakout. Cool. Here's your October opening range. That's a breakout. Cool. Momentum breaking above 60 since the first time this year, rather, since the highs. Okay. That's the first break above 60. Great. All constructive things. So yes, I would be in favor of buying a larger pullback in Kiwi, but from this standpoint, there's some risk. That pitchfork that we've been following since last week is right here. The 2017 low day close is on the same exact level, 68.11. Multi-confluence region resistance. Slope, 38.2, last year's low day close. You guys with me? Really nice spot. And again, this is not something that we just start to follow, all of a sudden. Here's the updates from earlier. Where's the last time we made a weekly chart on this? Was right here. This is the same slope we've been following. Here's the daily. We held that support level. There's the break. Low day closes right up here. This update is from October 29th, right? Fast forward to last night. It now converges on a near-term slope that we've identified off the lows. So for Kiwi, on this one, I just had to be in it. I was going to get really, really frustrated if I woke up and this thing tanked without me. So if it works, it works. We'll look for the opening range. If it breaks below that little near-term low that we made in Europe, great. Get that 67.45 level, take a little bit off, stop at break even. Next downside target, 67.15, 67 flat. So within the confines of that pitchfork, guys, look at this slope. It's just so simple. I love when markets give you this kind of symmetry on such a simple slope. Support, support, right? Why we don't remove our slopes necessarily all of a sudden. Support again, support a fourth time. Break, acceleration, break, acceleration, instant support, instant support. Okay, so that slope converges on the former swing highs from September. It's going to give you 67. Now, in the event that this thing just rips, let's say for some reason, the Fed is a little dovish today, and all of a sudden, dollar just sells off and Kiwi rips higher. If we break from here, the next upside targets are pretty clear. 68.51 is just a soft target. That's the former swing low we made from May. But really, the next big level of resistance is 69.20 into 69.30. It's a 10-pip region where the 26.17 open, that's last year's open. I've actually removed it from the weekly chart or the daily chart, converges on the 50% retracement of this year's entire range. So the May low also, if you look at this, guys, the 50% or the 200-day, moving average, 69, right at the 69 handle. So 69, 69.20, 69.30, all this region's kind of stacked up with some major resistance on the daily chart. That's in the event of the breach, which I think we get eventually. But from this point, I think it's a decent pullback from here if we do get some sort of move in DXY today. Marco says, may I ask what stop loss you use on the short Kiwi trade? Yeah, it's against the stop. It's against the high, rather, against the high that we made last night. So this was not even last night, guys. This is the RBNZ, right? They came out, and again, no change. That was expected. And my perception, Marco, is that it was pretty dovish. So when you see the market rip on something like that, and it's into a big resistance level, in my opinion, or at least usually when I'm trading on a near-term front, it's worth a stab at it. So, like I said, a quarter off here if we get it. I'll look to do something, if not close the rest of it, if we get down in this 15-pip region. But a stop is just against the high. And the entry, I think, was 67.90. So a little over 20 pips, almost 30 pips on the stop there. So here's the trigger. Obviously, you see I was looking at something last night. Here's the trigger also. This is a 2-hour chart, so it hasn't given way yet. But even into the close of trade last night, you were seeing divergence. It was divergence into overbought. So once we got that RBNZ spike, we closed that candle, and then we tried to attempt to move there again into the open invasion. We failed. That was just kind of like a throw up there. So see if we can't get some movement in Kiwi. Questions, comments on New Zealand dollar? All right, number 4 is Loonie. Here's what the dollar CAD looks like. So this one's another one that we're still kind of in, and it won't move. It's very frustrating, but we've been talking about 31.30 into 31.55 for weeks. I really got nothing left to say on this thing. It's just been. Listen, if you've been taking shorts off that region with me, we've been doing okay, but there's no follow through, okay? So holding a short, looking for the break or even to tag a lower parallel has been like a fool's errand. Every time this thing starts to move and I come into the first target, I take a quarter off, I get stopped at break even on the rest every single time for the last like 3 weeks. So If you hear frustration in my voice, that's why. If you put a pistol to my head, I'm still thinking the same thing I was thinking before. Now, the risk with a pivot break above 31.55 is all the more paramount now because of the amount of time that we spent here. The longer or the more times you test it, the bigger the break. So anything we take on the short side here needs to be super nimble. I know Jamie's kind of expecting and looking for the top side breach. So for me, it's all about this level. And there's a reason. That's even on the weekly chart, something that we've highlighted for months. Okay, it's a 618 retracement of the entire decline off the yearly high. It's the high week reversal close, 3130. It's slope resistance of the same parallel we've been following from the 2016 decline. Big region. And this is our 4th week attempting to make a breach above this. So all the more, like I said, if we get the crack, it's gonna rip. It's gonna rip. But until we do, I can't get excited about any long positioning. Now, listen, if we were to move down here into the 200-week moving average, you got slope down there, you got some former swing highs down there. If we were to slip into this region and it rebounds and it holds a weekly close, that's sort of a tell to look for the breach. But right now, it's just kind of sitting below resistance. Here's dollar CAD on the daily chart. There's that high we closed, 618, same zone. Look how many days we've had in there. How many closes above? Zilch. Okay, none. So right now, it's about 30.67 into 31.55. We still have to see a break of this immediate range. Now, it helps that it is the monthly opening range at this point, is right in that region. And I guess you can say for the same part, you can say the weekly opening range even. But this is the immediate range break I'm looking for guidance. Okay, a downside break, you're looking for 30.20. That's the level that we highlighted earlier in the week as the level we need to see break to validate that a more significant high is there. If we see a topside breach and a daily close above, there's nothing to stop it. 32 is an initial clean move to the upside there. The 786 converges on the upper slope near 32.56. All right, so it's pretty big here. It's make or break until we get a break of this range. Again, for me on the short-term picture, I'm still shorting against this high, but every subsequent trade I've taken this week has been smaller and smaller leverage, just because this looked pretty convincing. Then this looked pretty convincing. Then hell, even this looked convincing after the false break and pullback. And every time I keep getting stopped out on the rest of the trade. So I'm not going to get stubborn on this one. My stop is at break even. If we get the move into 30, 37, and I won't even wait for 30.20. Probably 30.37 will be where I'll wrap that up. That's the near term 100%. But the 30.20 break is what I want to see to validate the turn. This is longer term slope support, right, for the year. So I don't like that I'm kind of loaded up against the dollar here. Again, these positions are minuscule, as I always tell you, very nimble around these event risks, especially with the FOMC. I mean, who knows how the market will react? But at this standpoint, if it pivots above 31.55, bye-bye. Look for 32, look for 32.50. And that, my friends, is the loonie. Any questions on dollar CAD? All right, Aussie. My friend, the Aussie, has finally become back into focus. You guys know this is my favorite trade, but lately, it's been a really tough call. All of last month, essentially, this thing was just disgusting. We saw the monthly open rip through some near-term resistance targets. We talked about yearly slope resistance. This is from the high from February and April. We tagged it again in June. We tagged it again in September. We held there into the monthly open, even though we ripped on the first day of trade. Ultimately, for us, we were looking for a pullback to here, maybe that 50 line we reversed off to rip higher. Didn't get it, so there wasn't really an exciting entry for it. That's the issue with me on Aussie. Here's what the weekly chart looks like, by the way. Slope for the bigger picture from last year and this year's high. Support, support, support. This was resistance. The big level of resistance is 73.27 into 73.85. This is weekly resistance, right? I give you big ranges, but even on a closed basis, look at the reaction on the top, break, look at the reaction from the bottom. That whole region converges on slope from the yearly highs, okay? On a closed basis, again, right? There's the break. That means it puts the emphasis on this zone. Make sense? So Aussie's, coming in some big levels of resistance here. Here's what the daily chart looks like. Again, the big region, I would love to see that stretch into 73.27. I remember talking about that with you guys for months, over a month, as it was sitting there on the way down. Then we started to mess around with it with this. Once we gave it the pull through, it's been, pretty chopped up ever since we stopped looking at it. That level, that threshold, that pivot, okay, converges on the 50 line into the close of the week, essentially. Low day close from back here in June, 73.36, 618 retracement. This is the longer retracement of the advance off the low in 2016. So 2016 to this year's high. There's the 618, former swing lows, 50 line. Intraday chart looks like this. Ty, that's what I'm looking for. Oh, he says looking to fade into 73.27. Listen, on the initial approach, yeah, my inherent sort of initial look for would be, yeah, it's for exhaustion on the pullback, but really nimble on the pullback. Again, just like Kiwi, Ty, right? This is breaking yearly downslope resistance. So that's a change, a fundamental change in the slope, a fundamental change in the behavior for the momentum on both of these. Yeah, shifts the focus higher. So on the initial approach, yeah, I think you get some pullback from there. I wouldn't be opposed to taking some fading opportunity there for the dollar recovery. Ultimately, Ty, that pullback would have me looking for better entries for a long side play, for a pivot back above this region. Make sense? Here's the intraday chart. And here's what we look like last night. Okay, I was looking for a bigger pullback here. Why? This same slope series, so if I take you to the previous update, okay, just the previous day, this same slope series, support, we parallel here, gave us a really nice touch before the rebound. If you take a parallel of that and extend it to the highs, that stretch was a perfect tag of it, right? This is just this to the high. Look where we topped out last night. So for me, I kind of had this thing looking for into this morning. I wanted to see this thing kind of hold here and rip and fail, give us maybe some divergence on another tag. But you're not getting it, not yet at least. Well, let me take that back. You are getting that, but you're not getting it into the parallel. So here's divergence. Price action with a higher high on a closed basis. It's subtle. Don't even look at this near-term swing. Look at this. Subtle higher high, lower high, both levels below 70. I want to see exhaustion. Now, if we make a third high here and this holds again, maybe we get into the US trade session. This is one where if the dollar kind of rips first, if it jackknifes and holds above the low day close, that might be a good entry to play or bounce higher again. But for me, I still think this one risks kind of a near-term exhaustion trade off this level. It's just real clean near-term slope. So 73.28, 73.27. Let's see how we react there. If we get a stretch into the FOMC today, that's what would be the pullback play, Ty. The fade move would be from there. If we never get there, but this thing rips lower and defends former slope resistance, turn support, that might be a great entry for a long play. Yeah, no signals there yet. Yes, Ty. Yeah, he says, so you think the trend is now higher? I think, look, it's not necessarily what I think, right? It's what we see in price. And objectively speaking, right? This is not Mike Boutros' opinion or Jamie's opinion. Here's a basic trendline resistance that has not one, not 2, not 3, but 4 touches. Here's the resistance on the second of the month. We failed right at that slope. Here's the push through and break above. What's to be bearish about? You know? If we get into this region, yeah, I grant you, I would be looking for a fade opportunity here, but that's because of what's lined up there. There's so much lined up there. Former swing lows, a 618, slope resistance. It's loaded up. So yeah, I'll play a little scenario, a little exhaustion trade-off there. But on the whole, yeah, we just broke the October opening range. Here's the October open. We dropped lower. We tested it into the open of this month. Here's the break higher. It so happens that broke the median line and downslope resistance. I mean, objectively, yeah, I think this is breaking downslope resistance, Ty. Just like in Kiwi, price is breaking downslope resistance. This one's got a lot more legs. Interestingly enough, I even said earlier in the week on that Sunday update that this one looks like it has more footing behind it, just on the account of how it broke through that uptrend or downtrend resistance, rather. So, this one's at resistance. Aussie, maybe a little more to go before it turns, but the focus is broadly higher. Make sense? Do you trade Kiwi? Yeah, absolutely. I love the commodity currencies, Ty. Aussie is, again, I always tell you guys, probably had most of my trades in my career in Aussie, but Aussie, Kiwi, CAD, they all have opportunities. Questions? As I said earlier, Ty, I'm actually in a Kiwi trade still. I'm still short from last night. All right, so that is Aussie. Let's jump into dollar yen, number 6. Here's dollar yen. So we shifted our focus earlier this week when this thing failed. We were trading this one last month. We broke below basic slope support off the yearly lows. Looks pretty convincing. It dropped into this region, 618, 100-day moving average. We saw the reversal, but we wanted to see slope resistance hold. It didn't. Okay, it broke right back through above and closed above the yearly open. It's funny because I was talking to Jamie about this earlier in the week, and he was asking me my take, and I just said, I'm treating this as a false break of uptrend support. Okay, in those scenarios, you're basically back in the trend. You're basically back in the formation. You basically cross that off as just a false break, sort of washout scenario. It's dollar yen. It lives for this type of crap. So here's the reversal into near-term resistance, major pivot, January highs. It's all there. Here's the push higher. Now the level I'm looking at is 1387. If this is gonna hold, who was asking about this in the room? Charles, was that you? If this is going to hold, 1387 is the level. That's the high day close for the year. We registered on October 4th. It converges on the 50 line for this slope that we've been following off the yearly lows. So if we're going to fail, if dollar yen's going to turn, this would be the spot. With the same respect, if we push through this, it's my near-term bearish inval. If we push through this, you should see acceleration. I mean, the yearly high at that point would just be a soft target. I'd be looking for the highs that we made back in November of last year. That's 1474. Bigger resistance up into the median line. Nice confluence region there of some fibs between 1115, 115.30, 115.50. I'm looking really forward ahead here, but that's the risk if we mount this, in my humble opinion. So I'm looking for, I don't have any trades on dollar yen. I don't have anything on it yet, but I'm looking for, signs of exhaustion up here. Here's the near-term chart that we've been following. And here's what dollar yen looks like from our updates earlier in the week. Here's the pivot. As I noted, now that we broke, if this break is legit, look for support ahead of the 50 line. We did. We pulled right back. We crossed the 50 line in classic fashion, dollar yen, and then we broke back above. Here's the upper parallel. This thing has done nothing this week. Yeah, it's higher week to date, but from a range standpoint, we're still in that near-term range heading into the FOMC, just below the yearly high day close. So at the end of the day, guys, all I want to see in dollar yen, into the close of the week is either a pivot and close above 1380. We have to look higher. We have to allot the possibility for a bigger rip here. All things held constant, I still want to see this range resolve to the downside ideally, but there's just no conviction behind it. Okay, I know it's a messy chart. This is the weekly, formation here. So if I clear this out, it looks a little cleaner. So if you want to take a snapshot of that, feel free. But I want to keep in view that weekly slope as well. Any questions on dollar yen? Okay. Aussie yen. So this will be 6, this will be 7. Aussie yen is a trade I was looking at earlier in the week, and is another one where, because of dollar yen giving us a lack of clarity, on this one, I wanted to see Aussie yen fail at this near-term resistance range. We're breaking through. It's 82.15 to 82.25. The reason it came up as an important level is because when you look at it on the daily chart, it's a 2-point touch, so it's not a major resistance slope. But look, you have the median line for this formation, and the median line obviously offered resistance here last month. You have the 200-day moving average. You have the 618 retracement of the decline from the June highs. So there was a lot stacked up there. I was looking for exhaustion. We didn't even get a hint of exhaustion in any of near-term price action, so there's really nothing to do. Maybe a reversal candle or two here, but this thing was just, there was no momentum, no Momo at all. Here's the 1 touch, 2 touch of resistance. Couldn't even break a former swing low. Every time we dropped, we turned ahead of the former swing low, ahead of the former swing low, ahead of the former swing low. So when you're looking to trade on an intraday basis, or you're looking to trade a turn, you want to see that lower low, that higher low, right? We didn't get anything resembling that. So another missed trade. It would have been a decent trade, in my opinion, if we would have pulled back to this slope. Last Friday's low, the weekly opening range low for a test, either of the slope or this level. This is what I was looking for entry. Obviously, Mark had something different in mind. Here's the break higher. So look, if you're trading this and you're holding positions, no level changes, but you want to stay with the stop below 82.15. If it starts breaking back below this region, I'd be worried. I'd be worried. So anything, any long entries that you have below 82, I think is comfortable with a stop at 82.13 or 82.10. But for new exposure, there's nothing to do here on the long side. You'd be pure chasing, pure chasing. So no surprise, this one moving pretty much in lockstep with sentiment. S&P is pretty strong rebound that we've been looking at. Looks pretty similar, right? Here's the rip. So just wanted to highlight this level. Now that we pivoted above 82, you basically need to stay constructive above that region. Tough call, Marco says on dollar yen. Same story in Kiwi yen. It's just the yen crosses. Yeah, no conviction on them. It's earned its name well, my friend. The abomination is not a name I give currencies with ease. They really got to earn their stripes to get that name. Here's euro yen. Ty, I know you love this pair. It's another one where I was debating putting out an update on this, but just no conviction. Early in the week, we broke back above the median line. So the risk is to this 200-day moving average, if not the 618 retracement, right? And that converges on slope. So you could get a failure off one of these two levels, but how do you trade that, right? We're on a 7-day consecutive, 1, 2, 3, 6-day consecutive advance. Give me a break. Classic euro yen type nonsense. Let's just see really quick. When's the last time we've had? Here was a 7-day advance. Earlier this year, back in August, we peaked on that with a pretty decent pullback. Previous to that, last time we've had a 6-day advance, as we have now, was right here. Again, that day, you saw some chop. You actually pushed into a new high before turning. So that's 1 for 2. Also, 2-day pause before making a new high. Yeah, in most of these instances, guys, the trade wasn't over. Maybe a pause, okay, in the days ahead, but that's why I'm looking for 130.65. If we're gonna get that, I'd love to see it come off one of in this region, basically, for euro yen. All right, I digress. Commodities. That was number 8, gold and crude. Let's hit crude first. Michael, I'm still long gold. Okay, let's hit gold first then, man. Here's gold. She says, I'm still long gold at 1220, though I know all the levels and setup upon following you, but still need your near-term precise setup. Thank you. Yeah, man, here's what it looks like for me on the near-term picture for gold. You're holding along from 1220. I can't say I'm super excited about that. And the only reason is because A, we're heading into the FOMC, and B, we're slipping below this slope. So as I told you, was that last night's update? Jeez, must be getting older in my years here. It was the day before. Here's the gold update. So to start off the week, we highlighted this was still critical resistance. 1220 would have been a nice spot to get a long position. So I like it if it had come earlier in the week. The kind of fact that we're pushing through this upslope support, so we're kicking it out to here now, and we're trying to probe below that. Let's just say this, Eman, it was last night? No, Eman, it was the night before. It was a couple nights before. Making me second guess myself. There was one on Daily FX last night. That's what you're talking about. Yeah. And that one is basically talking about this exact level. So yes, from here, if we're gonna get a play, this would be the region. But below this, you have to be basically 1212, 1214 again. And that converges on the lower 50 line. Listen, how do I say this? Well, we didn't have a webinar yesterday, but look, man, what I want to say to you is this: when we come into such a critical level and you get this kind of reaction where you sail through it and you get a strong reversal lower, we press it again, we get a drop into the parallel. You still don't know if it's going to break. The thing that makes you think it's going to break is the fact that we tested this high and failed. So that begs a new low. We've now registered that new low. Is that suffice, or do you still need to make a deeper cut? So I like the way you're playing it, because for me, I would just have a stop maybe just a little bit below this region here, because you have some swing lows back here, you have some swing lows back here. Maybe really tight. I wouldn't get too aggressive on it, because if it drops, again, 100, if we're just going to make 2 equal legs, still could see 1200, 1205. Not the favorite scenario, but that's the risk, right? So have your stop against this low here. If it gives out, you're going to get another 10 pip drop, another $10 drop. I wouldn't want you to sit in it just because you want to wait for a drop into 1212. But let me see what this looks like real quick. So you see that, guys? Basically just took this. Obviously, again, this is sort of an emotional type of data release type of move, right? So if we just take this high and we take that slope, you can see that it's been resistance once we pivoted below it last night or yesterday. And then why is this touching support? Well, if we take a parallel of it, support, support, support. So I'm actually inclined to work with this near term. And that's not to say because I'm bearish per se, Eman, but it does 2 things. A, it'll help us clear the upside. So once we close, or once we push through the weekly open, okay? That's your new near-term bearish inval. And what I wanted to highlight is look where that median line goes, right into the same key region, key zone that we were talking about, right? So look, let's put a parallel on this. Okay, watch that. It could still move from here. It could still move because of this slope right here. If it moves from here and it pivots back right above, literally like the opening range highs, I guess this is near the European highs here. If it pushes through this region, yeah, look for that weekly open resistance. But that's where you need to get a little bit more play. Okay, that's where you need to see a little bit of a hurry. Make sense? And actually, you're getting some near-term divergence here. Here's a 60-minute divergence chart, guys. So again, we're looking at the close here. Obviously, a lower low in price, slightly higher low. As little and as minor as this seems, these are actually pretty strong triggers. Okay, when you have divergence, the closer, and I've said this to you guys before, the closer the divergence reference points are to the 50 line, are typically stronger signals. So I think you're looking good on that. I think you're looking good on that. Well, you need to see it push through this, okay? You need to see this former swing low, that confluence 50 line, that's upslope, resistance as well, turn support, turn resistance again. So if we get through 1225, I think you're good, right? But 1232, weekly open resistance, upper parallel, you got to see something go happen there. If it's going to break, it's going to be accelerated move right through. If it's failure, it could be something wicky, really like this, pretty strong. FOMC's on tap. Looks pretty good. Good luck on that, Imam. Imam looks good. It says to the maximum. Thank you. Hey, more than welcome. Well done. Okay, that was number 9. Number 10 is crude, and then we'll hit pound, and we got to run. Here's crude prices real quick. And here's what we've been following over on the updates. Here's crude oil. So, crude breaking multi-year upslope support. 2016, 2017 highs and lows. Parallel. This is the weekly chart. Broke clear as day below 67.83. We've been looking lower ever since. Now, 62.56 was a former swing high. Just lower is this nestled region right here. It's pretty significant. Here's the daily chart for crude prices. The zone in focus was 60.60. Okay. What's that 60.60? Well, 60.60 is the 618 extension, the 2018, this year's open, and a basic 38.2 retracement all coincide together. You're bearish below 65.82. That's what we've continued to suggest. Near-term price was holding this ridiculous channel off the October highs. We've been trading through this ever since. There's that key support level. Now, here's crude prices now. We haven't gotten into it yet, but the level, this is a 6120. The levels are unchanged, and it's still been like clockwork, guys. There's that October slope. We're still trading in it. We just keep dropping down our bearish invalidation. Earlier in the week, it was 65.82. And then yesterday, I think on Tuesday, we dropped it down to 63.57. Okay, another, again, some former June low swing from earlier this year. And then the 2015 high, 62.56, there's a downside break. That's a new bearish inval. Here's the main key support. If you're holding on to this trade, do something down here. Do something, okay? If you're looking for new opportunities, this is where you look for initial exhaustion in price. And with the same respect, guys, if we clear it, the downside break of a descending slope, again, this will probably be pretty accelerated. I don't have any targets on the intraday beyond that major level. Here's what the weekly looks like. This longer term slope comes in at 58.50, let's call it. Okay. Um, Again, I don't know how the merits of this slope are debatable, but let's just say that lower parallel comes in near 58.60 on the downside. So coincides pretty decent with this, just to clear this up right here. Right? 58.60. There's that key support. It's now on same slope, and all of these parallels, guys, are just off of the basic resistance we made up here. This 2-point touch started sailing through here last week, so we took a parallel off those highs, caught the high. Again, it's a little fake out there, downside break, turn ahead of parallel, turn ahead of parallel. This is just another sliding parallel, dropping it down to those lows. This is big. This is big. Okay, and interestingly enough, the decline here has been happening alongside, weakness in the dollar. Now, recently the dollar has made a nice little rally, and that's why we're seeing this jackknife a little lower, looking for exhaustion basically into 60, 59.94, 60.06. Look for support there. All right, last but not least, to close out the session, here's the British pound. This one, I've just been tracking it. I've been looking for see if we get a break below this slope line, if we get any moves, opportunity to take a short. There was actually an opportunity last night on the break here, test, to take a short against that high. I didn't get it in it, but if you're holding that, the level of which you don't want to really target outside is still going to be this pivot. I know it's last month's open, right? So now we have a new month. There's obviously a new November open. We don't have to worry about that, but it's a clear pivot in price and a 618 of the decline. Right? Boom. There was the 618. There's the pivot, acceleration, October open, same thing. Resistance, resistance, break, support, support, break, resistance, resistance, break. Watch that region. And also, we can kind of clean this up. Any questions on Sterling, by the way, before I delete some of these lines? I wanted to do it with you in the room so you kind of see the progression here. Maybe this slope would have worked better. We did break through it here. We did break through it here, but even on the pivots, support, break, acceleration, looks like that's just pivoted against. But there's just no conviction for trying to play in my opinion, guys, a Sterling trade from here. Here's the daily chart, and this is why when the daily chart's ugly, when the daily chart doesn't have much clarity on it, there's no point in kind of picking at it. Let price action sort of do what it wants to do. We're constructive. We made an assumption that this was a more significant low once we cleared 28.77 back to the upside. So ever since then, there's just been not much pullback to get in. I still think you're at risk here for a little bit of some whipsaw. You do get some trade balance figures, construction output, GDP numbers out of the UK tomorrow morning. Maybe that gives us some sort of catalyst for price, but as it stands right now, I just wanted to highlight the setup as is. Okay, for me, if we slip back below 30.30, yeah, there's a risk of a larger correction. Largely speaking, I'm still constructive on the trade. Here's Sterling on the weekly chart, just to give you a little bit of a view again of what the broader picture is here. This was encouraging. This is breakout territory, 33. It's still 33, 33.17. That's still the level of which that would put us on a much more constructive path, be a break of yearly downtrend resistance. So shelving sterling dollar for now, but no change to any of the levels that we highlighted earlier in the week. The only thing I would add real quick is just a quick retracement here off this low. Okay. Not going to help us for much right now, so keep the same levels in view. All right, guys, that takes us over 9:30. Gonna have to wrap it up there. Thanks for everyone who attended. Again, a quick reminder: midweek strategy webinar is coming up in just a few hours. Best of luck trading tomorrow into the FOMC, or today into the FOMC rather. Remember, it's priced in. We're just paying attention to what, if any, changes in the language that we get to the accompanying statement for the FOMC. So keep that on tap. It's 2 o'clock later today. And that's it from my end. Best of luck trading, guys. Have a great weekend, and I will see you on Monday. Cheers.